Hey, what's up everyone? It's Linus and you're watching my price action trading course on my YouTube channel Trading with Linus. In this video, I want to talk about some of the charts basics for the absolute beginners who might be watching these videos. Alright, so let's get into it. When it comes to trading, the most basic concept is the support and resistance lines. As I've said in previous videos, this is what most traders base their whole strategy on. They aim to buy at support and sell at resistance. The reason for that is that the support and resistance lines are without a doubt the most important element in technical analysis. All the moves in the market are eventually being analyzed in comparison to those lines. When price moves up from a support line, it's basically racing towards a resistance line, and when the price moves down from a resistance line, it's racing towards the support line. Think of it this way. Every support line is actually a price area where there are a lot of buyers willing to buy in those prices. So you can say it's an area of high demand in the market. And every resistance line is a price area where there are a lot of sellers willing to sell in those prices. So it's an area of high supply. So most traders' ultimate goal is to buy at the prices where there is a big demand in the market and then sell when the price is in an area with a strong supply. So naturally, when the price manages to break through a resistance line, that resistance line is now a new support line. Because in order for the resistance line to break, there has to be more buyers willing to buy in that area than there are sellers willing to sell. So when the resistance line breaks, it means there is a big demand in that area than there is supply. The same goes for the support lines. They only break when the supply overpowers the demand in the market. And when the support line breaks, it's now a new resistance line. Okay, so how can you find the support and resistance lines? Well, these lines exist on all charts regardless of their time frame. But of course, the higher the time frame is, the more important the support and resistance lines are. In order to find these lines, all you need to do is look at your chart and try finding the lines or areas where the price has touched the line but haven't been able to break through it and therefore reversed back from those lines. Every line with 2 hits or more is a valid support and resistance line. Of course, my personal rule for this is 3 hits or more, but most chartists believe 2 is enough for it to be confirmed. And depending on your time frame, the number of lines you can draw might differ, because obviously when you lower your time frames, there will be a lot of minor movements on the chart and you can still draw the lines based on them. And I sometimes have a lot of these lines on my chart, like this is the chart for gold and the lines I have on it. And hey, don't be obsessed with drawing these lines perfectly. There is no definite right place for them. I personally try placing them on round numbers because that way I can manage my trades better based on my own strategy. But that doesn't mean if your numbers aren't round or exactly the same as mine, then your lines are invalid. There is a bit of a wiggle room for when you can place them on your chart, so just do what works for you. A good tip I have for you though is to first use your daily and 12-hour charts and find the major resistance and support levels and draw the lines, and then give these lines a specific color. So when you are trading on a 5-minute or 1-hour chart, you can differentiate between these major support and resistance lines with the minor ones you might have drawn on your lower time frame charts. Alright, let's move on to the second biggest basic element on your chart, the trends. A trend is basically the general direction of the price movements. There are 3 types of trends: an uptrend or ascending trend, a downtrend or descending trend, and a sideways or horizontal trend. Some argue that a sideways trend is not a trend on its own and it's just lack of a well-defined trend in either direction. It's easy to spot the trends on the chart. All you have to do is looking at your chart to see where the price is going. Is it moving down? Is it moving up? Or is it stuck in a trading range moving sideways? For example, in that same chart of gold which we looked at earlier, we can clearly see that the price has been moving higher and higher with time. So we can say that the gold is in an uptrend or ascending trend right now. So what should we do next? We should draw the trend line. Okay, and how should we do that? It's very easy actually. A trend line is just a line that shows the direction of the trend. So depending on what type of trend you have, you either draw a line below the price movements or above them. In an uptrend, all you need to do is to draw a line which connects all the major lows of the trend. And in a downtrend, you would do the opposite, which is connecting the highs of the trend. The confusing thing about trends is that they can be a bit tricky to follow for beginners. For example, a beginner might hear the phrase never trade against the trend, and they might try to do just that, but what they do not know is that the statements like that actually mean you should find the major trends in each currency pair you want to trade and then trade in the direction of those major trends. Because if you switch between time frames, you can see one trend in one time frame and another trend in a higher or lower time frame. And don't get me wrong, you can still trade with each of those trends in each time frame you have. But what you need to understand is that when you are trading on, let's say, a 5-minute chart and the price is in a downtrend, you can go in with a sell order, but if the price is in an uptrend in a higher time frame, like 1-hour chart or a 4-hour chart, then the price might never reach that target you have set on your 5-minute chart trade, because it might be too big for that time frame you are trying to trade in. I will explain this later in another video in depth, and I will teach you how to do a multiple time frame analysis and how to set your targets in lower time frames properly, and how to trade each trend type successfully. But this is where I will end this video on chart basics. I hope you enjoyed watching it. Please subscribe to my YouTube channel, and if you like this video, please like it and give it a thumbs up. Thanks for watching and happy trading everyone.